Okay, I'll give it a few seconds here. Hopefully I've got that right link now. So it should be live. I'm not seeing anything quite yet. I might have clicked the wrong. Oh, hold on. Here we go. Okay.
Not seeing anything quite yet.
Okay, and I can hear my voice. Okay, I think we're good. All right. Can you guys hear me? Okay. Jesus. Okay. All right, guys. Let's finally get into it. Man, my whole thing, I was so worried. I was like, what if I start the stream and they don't release earnings for like half hour? Well, there's one way to use a half hour. Okay, so I'm going to just kind of cut right to it. I had a whole like presentation laid out like as we lead up to earnings and everything, but we'll kind of stitch that in later, I guess. So obviously earnings are already out. I've kind of saw a couple little like teases of that, but I've kind of avoided it largely. Before we get into the earnings, I'm sure a lot of you guys have peeked ahead, understandably. Let's first we're going to check on the EOS's share price throughout the day. I guess we closed at 1486. We're actually not moving too much after hours, negative 2% down. I was expecting to see kind of a bigger swing. I mean, maybe that'll come with the call, but I was kind of more under the impression that we'd see like quite a large move, and I'll kind of explain why. I'll bring this up, and hopefully hopefully you guys can see the Discord here. I actually made a pin to reference for the stream. We had one of our members, Lori. They posted that they found on StockTwits the historical price action after previous earnings reports. So we can see the last 6 there, and typically the next day we're down or up like greater than 10%, sometimes 20, sometimes even 30%. And over the next 5 days total, just quite a bit of volatility, as we can see. And I think especially in, like I said, I'm sure that you guys already know the revenue and the guidance and whatnot, but I think that a lot of what dictates the share price over the next little while is going to be revenue, backlog, and margins. Kind of curious, like I mentioned, I did have like a whole presentation before. I think we'll just kind of cut to the chase. By the way, the Discord there, if you guys are interested in joining, it's a great group of people, very helpful in research and just sharing ideas. So if you are interested, there's a link in the description below. Come say hi, come hang out if you're into EOS. Tuck that away. Okay, cool. So share price. And if you guys have any questions throughout the stream, let me know. I'll be keeping an eye on the chat, trying to keep an eye on the chat now that things are functional. Sweet. So revenue, we kind of mentioned the revenue. You know what? I will spend just a quick minute on the revenue before we do get into things, because I mentioned them all, like I think it was yesterday, that I wouldn't be surprised if they did revise the guidance downward because, well, I mean, they have a huge hurdle, right? Like if we look at the revenue, this is essentially what's being guided for. So if we look to over the past few years, 2020 we had $0.2 million of revenue. 2021 $4.6 million. Between 2022 and 2024 we had, we'll call it like $16 million in revenue on average. And this year they were guiding for $150 to $190 million, representing an 860 to, we'll call it 1,100% increase compared to last year. Q1 was 10.5 million. Q2 was 15.2. So, well, like consensus is 35 to 40 million for Q3, we'll call it. So, I mean, that's a huge uptick in revenue, like it going from, 10, 15, call it 40 mid-range, all the way up to like 70. That's crazy. A large reason of why you see these lulls, this is during the transition phase between the Gen 2 and Gen 3, their current offering, I guess you'd call that. there was a lot of downtime as they transition between the two. And as you can see, these lines are really starting to heat up. And this is just the first line, keep in mind. We'll quickly touch on margins. I know you guys are probably wanting to hear a little bit more about the actual earnings call, but margins are brutal. And for the same reason I just outlined, they're transitioning between the old and the new. But as you can see, it's like sometimes the gross margin is as bad as like 1,500% or 3,000% even here. But as you can see, like there was virtually no revenue that through those couple of quarters. The most recent margins that we do have, actually, we're going to scroll back down. You'll notice we're going to be jumping around a lot throughout this, but you can see the margins. It's like brutal. But if you kind of zoom in, especially like once the this first Z3 line starts humming, it's just going up and to the right in a very nice manner. The backlog and RPOs, I guess we can, yeah, we'll get into the actual earnings now, and then we can go from there. Because I am curious to see what happened with backlog. I guess I don't need my headphones no more. I am curious to see what happens with backlog, because over Q3, there weren't any announcements. This is the kind of history that EOS has with like proper contracts with letters of intent and with memorandums of understanding. You can see that there's nothing between Q2 and Q4 of this year. Now, that being said, it's not really surprising. Like if you look at booked orders over time, it is very temperamental. And especially if you can kind of consider the political climate over the past little while between the tariffs and between the Inflation Reduction Act, among other things going on, right? It's not exactly like people were rushing to they weren't rushing to make orders, right? With all the uncertainty, but now that things are kind of making I want to say making a little bit more sense, but making a little bit more sense, especially with EOS, I think we can expect to see those contracts come rolling in, as we have seen in Q4 in particular. So this earnings call, I think, or this earnings season, whatever you want to call this for EOS, it is going to be very kind of more based on what's happening in the future, obviously, right? As is the nature of investing. But yeah. So we'll see what they have to say. Actually, I'm going to put the headphone back in. Okay, cool. With that said, let's hop over to the earnings and see what we can see. A quick mention, by the way, the call is going to be tomorrow morning. It's not actually going to be streamed today. I'm sure you guys all know that. To make things complicated too, we have Redwire releasing their earnings on the same schedule. So we might touch on that at the end of the stream, but we're going to kind of more look towards EOS and then cross our fingers with Redwire. That's going to be another interesting release, but we'll get to that in a little bit. All right, so I'll refresh this. Okay, and the 10Q is released too as well. So that's helpful in terms of backlog. I'll open those both up. You guys can see this all right? I can see like a very small screen, but I'm just making sure that you guys are able to read this as well. I can bring it in a little bit more, I suppose. Should be good. Just taking a quick look at the chat. Okay, audio's good still. Yeah, call tomorrow. Yeah. Lab earnings. Yeah, Rocket Lab earnings is going to be another interesting one. No, definitely not exiting any positions. I won't make any decisions till later, like middle of the month at very least is probably when I'll start to buy or sell anything. Because it's just like this week is crazy. We had 5N Plus on Monday. We had Lemonade this morning. We have EOS and Redwire both today. Shift 4 tomorrow morning. Rocket Lab next Monday. So I'm just like sitting on my hands with the portfolio. All right, let's get into it, guys. So 30.5 million in revenue, highest in company history, double prior quarter, and nearly double full year 2024. That's interesting already right off the bat. I'm going to bring up a second EOS tab as well. I was expecting more in the range. I put 35 million for that. So A little bit less than I was hoping for, but we'll see what happens with that. Oh, sorry, I missed a line entirely. Reaffirms full year revenue guidance in the range of 150 to 160 million. Reaffirms. That's not a reaffirmation though, because the original guidance was for 150 to 190. So it's, I guess, reaffirming the bottom line, but that's still honestly surprising to see. Like, let's be honest, we weren't expecting them to hit that upper range of 190. That's actually quite surprising. That's going to be a massive quarter for Q4. All right, so 30.5 million revenue, secured the strategic 228 megawatt hour order with Frontier Power to deploy the EOSE 3. So that was the one that was announced on October 21st. I'm just checking my notes. Oh no, sorry. Yeah. October 31st. We had a couple orders that were announced on the 21st and one more on the 31st. So that's the first, and that's with Frontier Power. That's, you know what, give me a lot of jumping around through this call. So the so this is Frontier Power, the first 228 megawatt hours. Now, this was originally announced as a 5 gigawatt hour memorandum of understanding. As you can see here, it was announced April 15th during Q2. And that was later increased, or I think the way that they mentioned that is that there was actually 10 gigawatt hours that were bid into the pipeline. So double what was originally expected, and now more recently 11 gigawatt hours. So it went from 5 to 10 to 11, and just now we've got, we'll call it 0.2 of a gigawatt hour out of that. So if you look at the ramifications of that, we're looking at $55 million, or roughly 300 cubes. We're calculating that using a 750 megawatt hour average and $245 per kilowatt hour. Honestly, you could argue that this is probably closer to 250. We can get into that later. It's mentioned during the backlog and pipeline and whatnot. This is roughly what EOS is like charging for. It's $245, $250 per kilowatt hour. But yeah, that order is looking to be in the range of 55, we'll call it 56 million. And then I'm willing to bet they'll also mention this M&8 energy order as well for up to 750 megawatt hours. Now, up to is the big asterisk here, but it could be to the tune of 180 million, assuming all goes well. Another way to look at that is 1,000 cubes. So I think the conversation about like where are the orders, I think that can kind of be pushed to the side for now. EOS as of quarter end is at 1.2 gigawatt hours. So between the two orders, you're already almost at like 1 year of capacity. So we're not worried about this current line. We're definitely looking more towards the like the successor factory, if you will. Signed a 750 with M&8 Energy. So that's the other ones that we talked about. Formed strategic collaboration with Talon Energy, aimed at delivering multiple gigawatt hours of storage. Yeah, see, and that's like, I don't want to put too much weight into that, but like when you start thinking of all of these, you know, not even contracts, but like possibilities, like there's so many of their customers that are talking about gigawatt hours. And like right now it seems like a stretch when EOS talks about 8 gigawatt hours. Like we have Tesla with 3 different megapack factories, 40 gigawatt hours, 40 gigawatt hours, and the new one is going to be 50. So if EOS is building for 8 gigawatt hours and Tesla's building for 130, there's plenty of room to grow here. So they are EOS was awarded a $24 million in the state and county incentives to support manufacturing expansion and software hub development in Pennsylvania. So this is going to be their factory too. They're also relocating their headquarters from, where was that? Edison, New Jersey to Pittsburgh, Pennsylvania. So this didn't really make a lot of sense initially. Well, like in hindsight, I should say. The driving distance, and I mean, if you're C-suite, you're probably flying, but like the distance between the old headquarters and Turtle Creek, where their first line is set up, is like a 5 to 6 hour drive. So it makes perfect sense for them to be moving closer to the Turtle Creek factory, and also which is going to be like the same area as this new factory, the even larger factory. So Turtle Creek, for example, 200 square feet, 200,000 square feet total. This new manufacturing facility, 432,000 square feet. So much larger, much larger. So 3 major utilities actively cycling with 1 Department of Defense site. That's huge. Also, I think they're called Department of War now, technically, which is such a weird name change, but whatever. In operation, averaging 84.6% round trip efficiency across all cycles with Z3 technology. So that's very good. Like that's on par with like lithium based batteries, right? And the whole thing with zinc is like, oh, it's more expensive and it's not as efficient and blah, blah, blah. But I mean, numbers are numbers, right? Like it's doing better than I think even EOS could have expected. It's, yeah, like what I'm seeing so far. So they launched Dawn OS. It's a proprietary battery management system, software controls, and analytics platform, redefining how storage is managed and optimized. If you really wanted to put that into a single buzzword, you just say AI. That's what's making these batteries so efficient, and that's why these are going to matter at scale, is this platform, this program. Finally, achieve final cash receipt milestone under the Cerberus Capital Management delayed draw term loan with $43 million of cash received in October. So that'll be reflected, I guess, during the Q4 print. That's really cool. That's honestly, that's really, I don't know, gratifying to reflect on. I started investing in EOS. I think a lot of us started investing in EOS many years ago. Some of you are new and welcome. But like to go from, like when I started investing in EOS, I don't want to make this about me, but it was like very, very high risk, very high reward type of a deal. And this was before the DOE loan. This is before Cerberus. And it was kind of like, yeah, if they execute well, they can do this, but they're really waiting on this funding and to see them hit this final milestone, hit all milestones too at that, all 16 is very, I mean, yeah, good on the EOS team. Sourcing manufacturing. Okay, so third quarter highlights. We did the 30.5 million, 100% increase compared to the prior quarter and up 35x from the same period last year. Great. Yeah, like cool, but like, I mean, the factory was down the same. Well, I don't know, actually the factory would just be starting. That line 1 for the Z3 started producing in July. So it'd be like the first quarter compared to now, I guess. Gross loss of 33.9 million compared to 31.0 million in the prior quarter. You know what I'm going to do? Bear with me for 1 second. Actually, I can, you know what I'm going to do? I'm going to swap the screens even. Give me 1 second here. So what I'm going to do, because I just need to see the numbers a different way, we're going to just quickly enter the 30.5. Oh, shoot. Actually, what we're going to do, 30.5. Okay, and those are just estimates. These aren't accurate. I'll come back to that actually. Make a little note. And then the cost of goods sold was a gross loss. They're doing a little different. You know, we'll circle back to that then. Okay, I'll bring this one back. Or I'll try to bring this one back. There we go. Okay, and operating expenses totaled 27.3 million, 5.6 million lower than the prior quarter. Net loss attributable to shareholders. I mean, are we even looking at that really at this point? Adjusted EBITDA loss of 52.7 million compared to 51.6 million in the prior quarter. That's surprisingly good. That's a lot better than I would have expected, because with that higher revenue, you'd expect a much higher, the adjusted EBITDA to be kind of dragging with that, right? But I guess not. Total cash of 126 million, including restricted cash as of September 30th. Commercial opportunity pipeline of 22.6 billion, an increase of 21% compared to the prior quarter and 59% compared to September 30th, with 644 million of orders and backlog as of September 30th. Interesting. Okay, cool. So 2025 outlook, yeah, the 150 to 160 million dollar, consistent with the low end of the previously forecasted range. Unsurprising. Well, surprising that it's still so high, to be honest, but that's cool. EOSE is advancing the implementation of the sub-assembly automation at its Turtle Creek manufacturing facility with all equipment now on site. Cool. And 88% of its bipolar lines in commercial production. This automation, combined with increasing throughput of the company's first state-of-the-art manufacturing line, positions EOS to ramp production to an annualized rate of 2 gigawatt hours per year by year-end 2025. Cool. That's a good reiteration. That's what I wanted to see. There was some commentary made by Shane McBee. There's a podcast that was released, HC Talk, on October 1st. And there was some, I don't know, I don't want to call it like a lack of clarity. I don't know if it was misspeak or whatever, but I was just unclear about what's going on with the first line. The reason that it was unclear is, I'm paraphrasing, but I think he says like we're currently at 1.2 gigawatt hours. So like as of Q3 end, but then he mentions that the second line is going to bring them. And I don't understand if it was like a stammer or if it was like, when you're talking and you correct yourself, but he said that second line will put us at 2.2 gigawatt hours. So I'm like, does that mean that the two lines combined are 2.2 gigawatt hours? Or does that mean there's two separate lines at 2.2 gigawatt hours? I was unclear because I'm like, how is the first line at 1.2, but then the second line is only going to bring in 1 extra gigawatt hours? I don't know. So I think what he meant is like each line is 2.2 gigawatt hours. I don't know. Either way, that's an important number to know when we contrast that with backlog, and to kind of get an idea of like revenue run rate and whatnot, and how long the runway is. I'm not sure if we need to read all of this stuff. Maybe we can just kind of start digging into the numbers. I think, they're talking about the adding 3.8 billion to the commercial pipeline, 22.6 billion total, representing 91 gigawatt hours of energy storage capacity. That's cool. I mean, the pipeline's great and all. I think everybody agrees, like you like to see backlog more than pipeline, but I think that will come. Post-quarter, EOS announced a series of strategic wins, which added nearly 1 gigawatt of new orders, highlighting its growing influence across both domestic and international markets. EOS secured a 20. So this is the Frontier. That's kind of reiterating those 2 new orders, and the partnership with Talon. Capacity expansion. Okay, this is okay, so that's that. Yeah, the new facilities being mentioned here. Operations with line 2 production expected to begin by mid 2026. Okay, cool. We'll get more into the line stuff in a few minutes here, or maybe we should just do it now. Let me just see if are they going to provide more clarity for the numbers. Oh yeah. Okay, that's more okay. So real quick, we'll yeah. Where were we now? Okay, so on October 21st, there was that was a live stream with Governor Shapiro. They mentioned that they're relocating their headquarters from Edison, New Jersey to Pittsburgh, Pennsylvania, the 5 to 6 hour drive closer. They also mentioned that they're investing $353 million into a new manufacturing facility. 22 million of that is coming from the Commonwealth of Pennsylvania, and 2 million is coming from Allegheny County. Hopefully I've pronounced that right. Now, doing a bit of like napkin math, I'm just going to double check you guys can still see the screen okay. I did the wrong screen there. So if a $535 million investment brings them to 8 gigawatt hours, and 8 gigawatt hours at that $245 per kilowatt hour, is, we'll call that 2 billion, then EOS is expecting something to the tune of a 455% return on investment. And that's in 1 year of production. That's crazy. Like, that's just crazy. And another thing that I was reading into last night, so I was looking into like all the leases, all the different properties and whatnot, kind of prepping for this stream. The Turtle Creek facility, that was the lease for that was signed in 2022. So the lease is going to expire in December 31st of 2027. And I'm almost under the impression that they're going to ditch that factory, or maybe just use it just kind of like as a I don't know how to say it. Like, I don't see them staying there, to be blunt. With this first line, there's a mention that the way that the production that the batteries come out is inefficient. It's kind of like when you look at Tesla's Fremont, when you compare it with like Shanghai or Texas. Sorry, I've been sick all week. My throat's still. It's the factories are designed very differently. And with EOS, they mentioned that their batteries, they kind of start along this line, but then they have to like take an L. And I think they even have to leave and like go to a separate building for certain parts of that. And it's been unclear if they're going to continue to build more lines within that factory or why they're even going with this new factory if they do have room in the old factory. And now seeing that they're going to be building that second line in I don't know if the new factory has a name, like the Thornhill facility or Marshall facility. I'm not sure what they're calling it yet. The non-Turtle Creek facility. I'm wondering if they're just going to like put all of Project Amaze into that one facility. Let me just bring up the graphic for that too. So the original plan that was outlined November of 2023 was for 4 lines, 8 gigawatt hours total. And this new facility can host 8 gigawatt hours total. So I'm not sure what that means in like, are they going to keep 2 lines in the first facility, for example? Because I'm sure they could fit a second line in that first facility. So that brings them to like 6 lines total, or what exactly the plan is. But we do know that the second line of what could be 4 new lines is going to be in the new facility. So I guess time will tell with that one, but it almost wouldn't surprise me, kind of given the time frame, like the other line coming on, or the other line 2 coming online mid 2026. The second one, I assume we're going to be coming to light, maybe half a year later. I was actually tracking this, or kind of putting like, how do you say, like laying this out last night. This is the kind of running framework that I have. Let me just double check again that it's nice and large enough for you guys. So this is the current framework that we're using. So we know for sure that they're at 1.2 gigawatt hours for that first line, and that the second line is going to be coming online in mid 2026. It'll be off to a bit of a slower start, but we can assume that it's going to be a little bit quicker, like out of the gate, than the original, right? Like if the first line took 6 months to ramp up, maybe this one only takes 5 or 4, right? And with that, each subsequent line, we can only assume is going to be even smoother. Like I think they've kind of done all the hard work with Acro in terms of getting things working, right? And now that they've had that first draft of like, yeah, we have the line set up, but it has to kink off to the side and like has to go all over the place. Well, let's get rid of that and kind of take that knowledge forward into the new facility and kind of build each of those lines side by side by side by side. So if we do track this all forward, and I'm making the assumption that they're just going to close Turtle Creek to kind of focus in on that second factory to end 2027. That's just my running framework. And again, during that Shane McBee interview, he himself mentions, I think 8.2 gigawatt hours by the end of 2027 or first half of 28. So that's basically what we have. We have 8 gigawatt hours combined capacity starting 2028. So, leaving a bit of room for, to be conservative there. All this to say, at $250 per kilowatt hours, this one, like I mentioned before, sometimes it's 245, sometimes it's 250, but using that in contrast with the capacity, that puts us at $2 billion annually for a revenue run rate. And that's, let me just double check. Yeah, and we can only assume, that's at like full capacity too, right? That's you can assume there's going to be a little bit of downtime, but I mean, by this point, like I said, with Tesla building its third factory, 130 gigawatt hours total, and then you see the interest, like it's whether it's Asia Pacific, the UK, all over the United States now. It's like, this is just EOS's first proper factory. This one that they're just going to be opening up. Sorry, Turtle Creek, but it is what it is, you know. So I think it's I think this new factory is the start of something huge. It's going to be a much more streamlined process. They're going to be getting that revenue out at a much quicker rate. And the revenue is going to track with that, right? I think the issue that EOS is having or might have going forward is that they don't have enough capacity. And that's mentioned explicitly in one of the recent interviews, that when you look at like how much, I mean, name your AI company or your data company, whatever, and not even like AI or data centers, right? But like, I don't know, the need for energy storage in the future is like absurd. It's like quasi infinite, and EOS doesn't have to. EOS can take like 5% of the market, and still, this is nothing. This 8 gigawatt hours. This is just the start. This is just 2028. I wouldn't be surprised if by this point we're already talking about a second, third factory. Maybe I'm wrong about Turtle Creek. Maybe they're like, hey, no, we actually could squeeze 2 extra lines in there, or even 1 extra line in there. Still, like, it's, the implications are massive. So that's kind of my 2 cents on the capacity. What else should we look at? You know what we can do? Let's circle back to those numbers, because I do want to see the margins and whatnot. I'm going to set this up a little different again. Okay, so 3 months ended. Okay, so we have a little bit more accurate of a number. So 512. Okay, and then the cost of goods sold. So 6.4, a little higher than I expected. Not bad. That's beautiful. And I know that like EOS has been one of those companies where I don't talk about as much as I want to, because I realize like you can just look just right there. It's just like, wait, so the margins are negative 100%? Like, that's absurd. Like, who's going to invest in that, right? But that's the relationship that I want to see. Negative 324, negative 235, negative 200, negative 111. I know that's not great, but I like that relationship of numbers. That's great. That's cool to see. Let's do research and development. It'll only take a second here, and we can get the margins from that too. Wait, is that right? Yeah. Okay, so that's dropped down a fair bit. And 585. So operating expenses, cool. Yeah, that's another really, I like that. So negative 700%, negative 500, negative 420, negative 200. So heading in the right directions. Now, I'm wondering if they're still on track for this. I'm not sure if this is too small for you guys to read, but from the Q2 call, we expect to achieve positive contribution margin in the 4th quarter of this year and achieve positive gross margin as we exit the 1st quarter of 2026. So, I mean, that's coming up soon. But I mean, if they do what they've been doing, I mean, they essentially cut it in half here. If they bring that to 50%, maybe they break even, like realistically Q2 of 2026, but still heading in a direction I like to see either way. Excellent. Let's I guess we can move on. Just reading through the chat for a quick second. Hey, Vince. What's up, Vince? Vince, I know I keep pressuring you on shift 4, but maybe it's time we talk about EOS as well. Oh, I'm seeing comments about the Redwire earnings too. That's interesting. Cool. Well, I think that's more or less it for the EOS earnings. What we have so far, right? In the morning they'll release. Where are we? Oh, sorry, we actually do have the 10Q. I don't know if we really need to worry about backlog. Let's just take a quick look, because it was outlined. And I know that the spreadsheet's a bit of a mess. The other ones that are public are a little bit more polished than this, but one second. Okay, so I'm gonna just do a little shortcut. By the way, this is like pro tip right here. Companies, they always guide for they always only guide out one quarter generally. I mean, EOS is kind of an anomaly here doing the full year. But if you guys are ever wanting to find out the full year guidance indirectly from a company, hop into the 10K or 10Q. I guess it'd have to be the 10. No, either would work. And type like control F, either backlog or remaining. Watch, it doesn't work. Performance obligations. Because with that, as of September 30th, the company's remaining performance obligations were approximately 77,000. The company expects to recognize revenue of approximately 70% of this over the next 12 months. So right there, we kind of have indirect guidance for, well, the next 12 months. So it's a little cheat that I like to use. So 77,000. And keep in mind, this is baseline. This isn't backlog. This is the kind of like the non-cancelable part of the contract, I guess. So way to think of that. 77,000. That's that's lower than I might have expected, but I'll put something together as well, because we do have the past few years of these remaining performance obligations. And let's see. So 30 comparison. Just seeing how I put this in. Yeah, I'll worry about that not on the stream. I know it's not fun to watch someone do math on the stream, so we won't do math on the stream. I think we can kind of wrap up this section of it. I'm just checking all the notes. So we went over revenue, we went over the margins, we went over the backlog indirectly. I'll post something a little bit more polished later on. I'm sure there'll be something on the call as well that outlines that a bit clearer. We talked about the lines, the capacity, the new factory, the new headquarters, the CFO. Okay. That's an interesting one. So let's take a quick minute talking about this. So EOS's CFO, interim CFO, is Nathan Croker. We had Eric Havidi. He was hired March 4th, and he was fired 3 months later on May 27th, and there hasn't been a replacement yet. So Nathan is currently the chief commercial officer and acting as interim CFO. So it'd be cool to see them get a proper CFO on board. But I mean, kudos to Nathan for juggling. That's for sure. That's great to see. Oh man, I guess we can talk about the short report. Yeah, I guess we could. I'm gonna just, I don't know, just touch on it real quick, I guess. So we had a short report last week. Like, just first things first, releasing a short report the week before earnings, red flag. Like, come on. And I'm not going to be too extensive with this, but like, there was one thing in particular where I'm like, hold on a minute. So the claim is that there was a fire, the batteries were leaking gas and whatnot. I'll just read this little excerpt from the bottom. The fire department and paramedics had to respond to incidents at the EOS headquarters in New Jersey and its factory in Pennsylvania. I'm not sure why they're going to both, or if there are separate incidents, but it sounds like he's inferring that there was an incident here and there was an incident in Pennsylvania as well. And the workers had to receive medical treatment. Okay. EOS evidentially, that's not a word, but EOS also had to close the facilities for up to a week to let the gas clear out. So what we're going to do now is we're going to do our own little bit of due diligence. We're going to go to the transcripts. We're going to go to the most recent quarter, and we're going to control F, overcharge. So EOS themselves have already talked about this. We had an event at our Edison facility where we had an overcharge on a cube that was being tested. This is like when you see the Starship keeps blowing up, it's because they're testing the parameters. It's a new product, and they're saying like, hey, like, how much juice can we get out of this orange? Is it like the kind of brash way to think of it? And with that, you're going to have an overcharge. Like you need to test the capacity. You need to see how, like the limits that you can take these batteries to, right? So the overcharge on the cube resulted in smoldering of plastic inside the cube. Not wasting a crisis, we took over 1,000 air quality measurements while that was happening. We wanted to be able to get the data to show customers that when they do have a problem, and problems will always happen, that this is a safe, non-toxic product to put in your neighborhood or onto your job location. So we found no hazardous readings in any of these measurements that we took. These 1,000 measurements were taken all across Edison. We never closed operations in the facility. So evidentially, they didn't have to shut down. And they worked with the local fire departments to get the water to get the smoldering to stop. And the water was tested at the end. We collected the water, put it in a tank, tested it, and found that the water was as clean as it was when it went in the cube. So it proved out that thought. So, I mean, if you're going to write a short report, make sure that management hasn't talked about it in the past 3 months, I guess. Like, I don't know. And it's just, I don't know, sorry, but like low quality. I don't know, just even the timing, like a week before earnings, and like, let's just layer it on. Like we have 30.12% short interest. Like this is just, I don't know, expected. I mentioned it a long time ago too. I'm like, you guys, there's going to be short reports from like on Rocket Lab the closer we get to Neutron, right? The more that the stock price goes up, there's going to be, some folks that are like, hey, let's, I don't know, lie to make money. And yeah, there's Fuzzy Panda for you. Just for another reference as well. FinViz also is quoting around, where did I see that though? Short interest. I was just looking at this the other day. Yeah, so this one gives us the whole history. So it's like, basically since 2024, it's been like 30% interest for shorts. Kind of crazy, but kind of expected. It's like, I'm hesitant to compare EOS to Tesla, but like it's the same thing. And like you're seeing with Rocket Lab 2 now, it's just like, oh man, I don't know. I can't wrap my head around short reports, but they come, and especially during periods like EOS right now, right? Like the next thing is going to be like, oh, their new facility is, I don't know, sinking or Lord knows what, right? But it comes with the nature. It's, I don't know. It's like, to kind of contradict myself, like it's one thing if you're like, hey, like Palantir, maybe not Palantir, because I do have a grudge, if you will, or feelings about Palantir. I wouldn't even call it a grudge, but like, it's one thing if you just think the share price is really high and you quietly do the short position, just saying like, hey, just, like a quick analogy is like, hey, that $20 sweater that's being sold for $200, and maybe you're paying more for the sweater than you otherwise would have. So I'm going to wait till that sweater's on sale because I know it will be, right? That's one thing. But to like tarnish a company's reputation so that you can get ahead, not the vibe. It's not the vibe, guys. Not the vibe. Fuzzy Panda research. Like, get the fuck out of here. Anyway, moving on. You go shorts. I think that's it for EOS. I guess the final thing we can touch on is tomorrow's call. We do have a bit of a glimpse into it, so we'll look at maybe the top 5 questions or so, and then I keep losing the chat here. Shift forward to spot out a New Zealand company. Interesting. Yeah, we'll kind of go over maybe 5 or so questions from the call tomorrow and see what kind of quality questions we're going to get. David C asks, as the company navigates a capital-intensive scale-up phase, how are you balancing the need for fresh funding with the imperative to avoid excessive shareholder dilution, and what milestones might unlock access to lower-cost capital? I'd imagine that EOS is just going to kind of be like just point in Cerberus's direction. Like that's kind of it. That and the DOE loan, like I think everything's kind of set in stone. Like when you look at their balance sheet, when you look at the cost of the new facility, like there's going to be dilution, right? Especially when there's that Cerberus that lockup ends. But I don't know, like par for the course, really. Like we kind of know what to expect at this point. I think EOS has done a pretty phenomenal job, kind of outlining dilution and whatnot. I'm actually expecting, I think that, well, not me, there is an expectation that there's going to be some sort of raise by the 16th, I think it is. So keep an eye out for that. No, Fuzzy Panda research does not sound credible. Next question. With Q3 shipments ramping to 2 gigawatt hours annualized, $672 million backlog and 18.8 billion pipeline, up 21% quarter over quarter. Update on new major orders since Q2. I think that's I think we already got that. They'll probably just skip that question. They gave the update on those new orders, especially those two. They'll and hopefully they go over like the how the MOUs for Frontier are progressing. Like, we just got that smaller order from that, what's going to be a very large set of orders, but it'd be good to just kind of like, put your finger to the wind, so to speak. What is the long-term vision and how do you plan to surpass or match the competition? I think that Project Amaze slide that we looked at earlier, that is the long-term vision. And I think that's just, that's the medium-term vision at this point. Like that is the item to be copied and pasted. Like, we brought up Tesla earlier too. It's like, once you design the machine that makes the thing, like it's like that. I think a lot of people don't give credit to the engineering that goes into the factory, like the folks at Acro working with EOS. Like once those factory, like once that plan is laid out, once all the machinery, like how many inserters you need, how many belts you need and whatnot. You can tell I've been playing Factorio too much, but like once that stuff's all set, it's just like copy paste, copy paste, copy paste. And like it's a matter of time, especially with Frontier. Like if you're talking about like shipping all these batteries to like Asia Pacific, to the UK, to like all around the world, like this 1-2 factories in Pennsylvania, like that's just the start. That is like in the next line, they're not going to be like, oh, well, we'll only, we're going to get a factory in the UK, but we're only going to build it for 2 lines. Like, no, like the next factory, probably going to be for 4 lines minimum, maybe 6, maybe 8. I don't know. But it's just that copy paste kind of mindset. Like the lines are made, the Z3s are set. They're, proving themselves. Like it's just, yeah. Read a couple more, I guess. So what's the roadmap for the next year, 2026? Data centers need huge energy. Any plans towards data centers? Yep. They delivered a pilot to, I think they described it as a blue chip customer. That was last quarter, and then it's performing better than expected. So who that customer is, though, I don't know. Realistically, like, okay, if I had to throw a dart at a board, it'd land on Microsoft. Google makes a lot of sense too. Amazon really makes a lot of sense. Like just with the kind of, I don't know, butting heads or whatever, the little tantrums between Musk and Bezos. Like it's, you see it already with the Kuiper deliveries. Like they could be, they could have been, Amazon could have been much further ahead in their deliveries of the Kuiper constellation if they would have just went with SpaceX. But like they're kind of stubborn, went with Atlas 5, and I don't know. I get there's a grudge or whatnot, but I'm like, it's fiscally irresponsible in my opinion. Like you've spent like $10-20 million more per launch than you needed to, but I don't know. I guess it'll be different once New Glenn really starts firing, which like next launch is in 2 or maybe 4 days. I don't know if it's the 7th. I heard the 7th, but I heard the 9th too. I don't know. But all this to say is like Amazon's not shy of like snubbing the Musk umbrella. And I mean, if you're looking for like capacity per acreage, EOS is your call. Like, yeah. I'm seeing Sunday for the new Glen launch. That's going to be cool. So we'll go for one more question. Then 3:30, I guess or I'll check the chat too, and then we'll hop over to Redwire and see what's what. Can you provide an update on the timeline around Factory 2? Yeah, I think we've got that update that the second line is going to be there. Project Amaze before. No, I think we've kind of answered this, and I don't want to be like, I know everything, but like I think Project Amaze is Factory 2. I think that they're going to phase out Turtle Creek over the next few years once we have those more efficient lines running. And there was one more question that I wanted to touch on. I think it was this one. With the current lead times, what is preventing EOS from ordering all 3 remaining lines now to fully populate the new Marshall site faster and achieve hyperscaling capacity? I really hope this question's asked, because like, and I think realistically, like, to be like responsibly, they'll get that first line, that one, up in second half of 2026. I know they said mid, but let's call it how it is, or how it's probably going to be. Once that line's proved, then I think you'll see the next 2 in quick succession, and then I think after that we'll really get the ball rolling. So I think that's it. I'm just going to check the chat. If you guys have any more questions about EOS before we move on to Redwire, let me know. We're not going to spend too long on Redwire, by the way. The whole family's been sick this week, and we burnt a lot of time with the technical issues at first. So, oh no, I'm seeing Redwire blew their earnings horribly. Like, how? That's not like how. Like, okay. All right, let's hop over to Redwire. I'm like nervous, kind of excited. Redwire. Oh boy. Earnings release. Sorry guys, 1 second. There's one last thing I wanted to one last thing I wanted to touch on. Well, actually more just check for myself, really. But I was curious about that, like how are you scaling the capacity? Because we're currently at City Utilities. I think that's going to be done, I think, soon-ish, like by the end of the year for sure. So we have the IEP order coming up next, if not already starting to. I think that's what the guidance is for the year, like 150 million. I'd imagine that it kind of encompasses these 2 primarily. Excuse me. And then past that, we have 1 gigawatt hours. I don't know if you guys can see the sum in the bottom corner. 1 gigawatt hours of capacity. So that's like their current rate. And then past that, I mean, hopefully we start to see some more of these larger orders. But yeah, they still, like, right as it sits right now, they still have like 6 to 9 months of. I mean, if they really ramp up this line by end of year, like they're planning to, maybe closer to 6 months of orders ready to go. And I think it's safe to assume that they're going to get a whole lot more by then, with like 12 gigawatt hours of MOUs lined up. Like that's going to be awesome to see. Okay, losing my voice. We'll do Redwire quick. I'll also bring up my reference on the other screen here. Okay. Redwire, by the way, is trading at like a price to sales of 2. So I don't know how you blow an earnings from there. I don't know. That's crazy. Sorry. What last thing I promised. I just wanted to check on EOS's share price before we do this. So negative 5% down. I think more is kind of like hinging on that call tomorrow, and I think it's going to be a positive call. I think more than anything, we're probably looking for tone from Joe, and if that recent stream from October 21st with the governor of Pennsylvania is any indicator, I mean, he seemed to be in really good spirits there. So Yeah, cool to see. Now let's get into Redwire. Redwire. Like how are you down 12%? Like, okay, dude. Okay, revenues for the third quarter. Like, I can't take this seriously. Okay, so 103.4 million for the quarter. Okay, so that's like, up 50.7% year over year. Gross margin of 16.3%. Okay, that's actually not bad. Last quarter was negative 30%, but there was that the acquisition fees from Edge Autonomy and the estimate at completion impact as well. So seeing the gross margin of 16.3% is actually kind of on par with what was expected. So not bad. Year-over-year increase in book-to-bill ratio, 1.25, contracted backlog to 355.6 as of the third quarter. Looking at the backlog. So backlog as of Q2 end was 329. Okay, well, that's decent. Awarded contract to develop and roll out. Like, one of the issues I have with Redwire is it's like there's a lot going on behind the scenes, and this is why I don't know, recklessly optimistic. Is like you hear stuff like this about like the rollout solar arrays for Axiom's first space station module. You hear like Redwire is constantly like, hey, new contract, new contract, new contract, but they never seem to mention the brevity of the contracts, and it leaves you to wonder, like, and granted, like, sure, it's government related, but it's like, is this like like a a research contract for like a couple $100,000, or is this like $500 million? Like I don't know. There's just nothing to their announcements. It feels like it's like cool, but I don't know. So launched pillboxes, sure, yeah. And they delivered some stalker systems during the quarter. Yes, like what do you do with that? Okay, like you made a delivery. Like how? I don't know. I understand you can't say how many, but like it's just one of those things you kind of have to just shrug. Like, okay. Net loss for the third quarter increased by 20.2 million as compared to 21. Oh, for the year prior. Okay, interesting, but not interesting. I mean, it's a lot more revenue, so it's going to be yeah, it's not disproportionately higher. Like it sounds bad, but when you consider that their revenue essentially doubled and that their net loss essentially doubled, it's kind of like, okay, sure. Interesting stuff so far. Oh, dude, give me a break. During the third quarter, the company had a net unfavorable EAC change of 8.3 million. What happened? Like, okay, so the whole thing was like in the Q2 print, there was an EAC impact that was recognized in Q3, but well, how do you say that? Like outlined in Q3, but recognized in Q2. So I kind of felt like I was under the assumption, okay, they just put all the bad news into Q2, and they mentioned like, oh, our accounting got so much better, and apparently not, guys. 8.3 million. The last one was, I think, 24.3 million, if memory serves. So 8.3, I mean, I guess it's an improvement, but like, man, brutal. I think with that too, yeah, I'm going to critique this as well. On a quarterly basis, book to bill ratio is 1.25 with an asterisk of, well, with that EAC impact, it's going to be less. It's going to be a worse ratio than that. They tried to play that last time too. And it's like, well, yeah, your book to bill looks awesome because your revenue took a big hit because you guys can't seem to keep a schedule. Interesting. Net cash during the quarter. I'll look at this a different way later, make some posts about that. Free cash flow, compared to 2.5. Okay. Yeah, yikes. Forecast. Oh, here we go. Due to the ongoing U.S. government shutdown, a number, yeah, there's a reason for, hold on. Let me just read it before I start talking too much trash here. First thing we're going to go, I want to highlight that from the Q2 print, revenue guide was 470 to 530 million. Did I misread that? No. Jesus. Yeah. So it went from 470 to 530 million to 320 to 340 million. Like, what is the current year even at? So 200. Okay, that's rough. That's rough. I don't think there's anything much past that. Probably gets into the numeric stuff. Yikes. Well, yeah, that's another fumble. Redwire. During the first full quarter as a combined company, Redwire remained focused on the path of profitability, recognizing record revenue of 103.4 million, a sequential year-over-year improvement in adjusted gross margin. Oh man, interesting. Well, this might explain why they're getting a new CFO. That's probably it right there. That's a rough comparable. Yeah, and actually, let me bring the other tab over. Actually, let me just, here, we can play with the numbers for a quick second, then we'll wrap things up. So bring that over. So yeah, we have the history of the full year. Again, I don't know if you guys can see that, but we have the full year from Q3 of 2025 is 320 to 340 million. Yeah, I mean, starting at the beginning of the year, it was 535 to 605. Now it's down to 320 to 340. That's a notable jump, or like notable tick down. So we could even just do like 330 to get the indirect guide for Q4 V20. Oh, I made a mistake somewhere. Yeah, definitely not 3 million. Wait, where did I make the mistake? It's 300. There we go. No, did I make another mistake? Or is that just... Oh, it's actually just... Right? I feel like I'm going crazy here. No, yeah, 330 is mid-range. So they're expecting another like revenue to be flat. 103 versus 103. Yikes. I mean, not terrible, but yeah, not what it was. Not what it was supposed to be, that's for sure. Curious too if they're going to, like, what the cash is at. Yeah, okay. I think we'll wrap up there. If you guys have any last minute questions, let me know. But yeah, I'm going to dig into the numbers and probably put out some slides maybe tonight still. Depends. Like I said, it's like you have EOSE and Redwire both with their calls in the morning, and Shift 4's entire earnings presentations in the morning. I'm really excited about that one as well. And it's going to be interesting to look at the portfolio tomorrow. That was net loss, yeah. Sweet. Well, I'm going to call it there. Thank you guys so much for joining. If there's anything huge that's mentioned in any of the calls, maybe we do another stream in the near future. But yeah, I'll be signing off now and digging into the numbers. So stay tuned. And oh yes, last question. Yes, I do think Neutron is delayed. I think it'll be vague terminology, like vague phrasing, but it'll be like, yep, like end of this year, early next is probably what we're going to see. So I think we're going to start to hear little trickles of like, hopefully this year, but it's a launch program, green light schedule, you know, that whole thing. So, yeah, interesting times, you guys. This is I think a good call for EOSE, maybe not so much for, or sorry, a good release for EOSE, not so much for Redwire, but I mean, we'll do some more digging, but I'm still pretty optimistic about both companies long-term. So thank you guys, and hope to see you in the next one, and like, subscribe if you haven't already, and have an awesome day. Sweet.